watching Business Today Television. I'm Sakshi Batra and this is the closing edition of Market Today. Over the next half an hour, we will be witnessing the final trade of the Nifty, of the Sensex, of the stock markets for the year 2025, viewers. This has been a year which has been witnessing a lot of uncertainties, be it local or global, on trade, on exports, on policies, on reforms, on geopolitics. There has been everything that the markets have witnessed all through this year. And finally, after some days of mellow trade on the D Street, on the final day, you are seeing that the Sensex is up by 700 points and the Nifty is also jumped by 200 points in trade at the 0.8% uptick. You can actually see days high move on the Nifty, and we are in fact poised to end this year on a high note as well. What is it that you should be looking forward to in the new year 2026 is something that our focus will be in the last half an hour of trade, even as we decode the last few trades that are pulling up the market sentiments higher. But let's welcome Mr. G. Chokalingam from Economics Research on the program with us. Warm welcome to you, sir. Good to have you with us, and here's wishing you from the entire team of Business Today Television a very happy new year ahead.
Thank you very much. I wish you and your team, as well as the viewers, a great year, happy new year ahead. Thank you.
Thank you so much. So, Mr. Chokalingam, at the outset, if I have to ask you to explain to our viewers or sum up for our viewers what this year 2025 has been, what are the lessons learned, and of course, as we step into the new year, what is it that we should remind ourselves?
Certainly. Very interesting question. Three things. First of all, since 2024 September, the majority of the small and mid-cap stocks have fallen a lot. So it has been a very bitter year for many retail investors. In fact, Sensex and Nifty, they do not reflect because they were benefited by continuous buying by DIIs. But in listed space, people have lost a lot of money. And second, what it means, again, never lose valuation comfort. So both in in second listed space as well as the primary issues which got listed, more than 50% of the newly listed stocks are in red. Nearly 60% of the already listed stocks are in red. So the biggest concern, apart from the liquidity which got squeezed due to primary market, is the valuation. People who lost valuation comfort and chased at any amount of valuation, they lost money in these small and mid cap stocks, both newly listed as well as the old traditional listed stocks. Now, third, what is going to be in store? I am extremely bullish on small and mid cap stocks in 2026 calendar year. First of all, the valuations have become very appealing for many stocks. Second, the inflow of new investors remain unabated. Every week, you see 6 to 7 lakh new investors are coming to the markets. And third, apart from valuation, there are a lot of unique stories available in the small cap, and particularly, and that should play out. And the trend of losing money in the last 15 months in September 25 probably will be reversed starting from February in 26. And I believe 4 to 5 themes will play out in a big way in 26, which will give give an opportunity to create wealth in the small cap segment.
Okay. Mr. Chokalingam, you rightly pointed out, retail investors who've been going big on mid and small caps have definitely had, a year to worry about because their returns were definitely got affected. Going forward into the new year, what is the strategy you recommend to them? This was a year when most of the large caps pulled the markets higher. The banking financial names, they pulled up the markets. Towards the end of the year, we saw the metal stocks shine bright as well. But the large cap IT stocks, they pulled down into the markets as well. There were many other pockets that also dragged consumer durables, maybe even the consumption oriented sectors, all of them which have always been seen as the defensive pack. None of them really provided a lot of support to the markets. Going forward into the new year, what do you expect?
Certainly. Very interesting question. Going forward, one should always remember to keep minimum 30% in Sensex Nifty stocks, because we don't know when small and mid cap can get a big hit. Even if fundamentals are good, small cap for no reason they can fall just because of this liquidity constraint. So what I learned in my 3 decades of experience is that if you are a conservative investor and you can't have appetite for risk, downside risk, then minimum 30% always keep in Sensex and Nifty because DI will come to rescue. And if you are too conservative, it can be up to 50%. The balance 50 to 70% in the quality small and mid cap stocks one can invest. That should be in the range. Above 500 crore to it could be even 50,000 crore. So you can play in that continuum of market cap from 500 to 50,000 crore depending upon your risk profile. Your risk is your risk appetite is very low. You are too conservative, then you go towards 10,000 to 50,000 crore of mid caps. If your risk
Yeah,
appetite is very high, below 10,000, so that should be. And then I can present, if you want, 4 themes which I am very optimistic and I believe they can play out
absolutely.
in 26.
Please.
Yeah.
Okay.
So, yeah. First of all, the banking and finance has played out, but in the fag end of 25, what we have observed is that acquisitions happened. For the first time, so many acquisitions happened in the fastest time in S Bank, Federal Bank, RBL Bank. So this is a new trend which I believe would carry forward in 26. So particularly the private banks, because the acquisition cannot happen in public sector banks. So 25 was the year of public sector banks. I think 26 is going to be the year of the private banks, particularly the old private sector banks. Second, agri theme. Continuously for last 3 years we had a very good monsoon and robust food grain output continuously rising, and that is going to throw a great opportunity in 26. All agri related. Third, the tire stocks, they recovered, but they have not played out the way I was expecting. I think 26 they will play out in a big way because oil price is still down 25% from 52-week high. 65% of the raw materials are related to crude oil derivatives for tire companies. Domestic natural rubber price also weak, and then you have automobile sales picking up, and rate cut happened, GST rate cut happened for tires also. And fourth one, the data center is going to be real. People are talking of several billions of dollars investment coming into it. So it is going to drive demand for many supporting
Yeah.
services. One of them would be the corporate office premises. The demand for corporate offices premises would increase substantially. So one can carefully play on these 4 themes to create wealth.
Okay. Now, Mr. Shuklingam, I think the one factor that everybody wants to know is that you also briefly mentioned that the FIIs were completely absent in the secondary markets this time around. One of the most, record sell-offs that we've seen through them, it was in 2025. Will they have enough, opportunities to come back to India? Do the valuations attract them? What are the triggers that can pull back the FIIs back to India?
Certainly. Very interesting thing happened, or unique thing happened. In 24 calendar year, FII sold heavily in the, a secondary market. Both primary and secondary put together, they sold heavily. Then in 25, they are marginally net buyer, but they sold heavily in the listed space, but they bought heavily in the IPO space. So therefore, last 2 years, it's a big pain for the investors who invested in the listed market, secondary market. Now the question is whether FIs will come back. 100% they will come back. If you go by the history, every severe correction always attracted the investors. Yes, Sensex Nifty have not corrected, but a lot of stocks in the small and mid cap, even with above 5 10,000 crore market cap, have corrected substantially. The FIs can come back. And second, you know there is a ample evidence that they like Indian equities. They just shifted the focus from secondary to primary market. Secondary
Hmm.
market generally for short to medium term, of course for long term, but people invest for 1 year perspective also. When the rupee was falling, they stayed away. So
Yeah.
26 possibly, if we can resolve the tariff issues with the US, rupee will stabilize. It can even improve, and FIs will come back. The most important thing is that you look at the FDI commitment. Last month, in the last 2 3 months alone, the corporate US corporate and big firms have committed cumulatively $135 billion to invest in India. So the
Yeah.
story remains strong, and FIs will definitely come back because they also have a long history of substantial wealth creation in the listed space in Indian market.
Okay. One another factor that has ruled, throughout 2025 is the outperformance of asset classes in the bullion, the gold and the silver rally that nobody ever expected will surpass everybody's imaginations, even the technical parameters. Nobody could judge what are the levels that we could be seeing on gold and silver. Even though today there was, smart, sharp correction in today's trading session, but despite that, it still remains the biggest performing asset class, gold and silver, with near 80% returns on gold and near 180% returns on silver as well. Now, this has led to a lot of FOMO among investors, those who could not catch up the ongoing rally, those who found gold and silver expensive at every level it went to and hoped for some correction to happen that never happened. What is it that you are advising clients? Should they stay with this winning class or should they now focus back on equities?
Very interesting question. One thing one has to understand that in post-COVID, a lot of young investors have come into markets, commodities and financial markets in a very big way across the world. Now,
Hmm.
what is the structural change? These people, particularly the young generation, want to have a quick money and they want to buy a own house as early as possible. That has been the trend which is acknowledged by many. So for making quick money, en mass they shift to some asset class, and they go in a very big crowd and chase them. And that is what happened in the last 4 5 years. You saw crypto having a massive rally, then correcting. Then you had a equity, then you had a gold, now recently silver, and last few days or few weeks now copper. So
Hmm.
this trend is not going to change. Even in 26, a majority of the young investors are going to jump en mass. So it will be an opportunity, it will be a risk. So you have to be smart
Yeah.
enough to jump in any asset class at early stage, not at a late stage. But according to me, it's difficult to forecast. But I believe 26-year calendar year is not at all likely to give any substantial return from silver and gold. Already, a lot of households in India, they have reduced their buying of gold jewelry, particularly the middle and upper middle class, and silver also is going to correct. I believe the worst case they may fall, in double digit. In the best case scenario, they may remain around same level for 26. That is my strong conviction about gold and silver. They have played out enormously.
They're played out enormously. Well, let me also understand from you, when it comes to selecting the kind of sectors there are. What kind of sectors do you think will outperform? Metals have started to pick up pace over the last couple of sessions. We were talking about gold and silver. That rally is now fueling or trickling its way down to the base metals. We've seen what has happened with copper. Do you think the metal rally can continue?
See, if you go by 30 years of history, the industrial metals, always cyclical, both in the real commodity market and in the stock market. So, because very simple logic driven, higher the metal prices, new players come in, existing plants expand the capacity, so the rally fizzles out. I think it has played out. It is too risky now to be overly bullish on industrial metals. And as far as the sectors are concerned, the banking sector will do well, the tire stocks will do well. These two, and apart from that, even the telecom companies will do very well. And also, the one more thing which will play out in 26, possibly the mid-sized IT companies could be
Yeah.
a bit of acquisition because the large cap companies are not able to grow in double digit their exports. So we already saw some trend, but I believe that can extend to the listed space as well in 2026.
Okay. Is there any space that you still would be very cautious as we enter into 2026? Which area will be cautious for you?
Digital business. A lot of companies are burning the cash and they are giving their services at a discount to the consumers. So consumers are the real king, not the investors who are buying in the listed space. B, many of these digital companies have not completed their venture capital cycle, which means they are yet to come out of the complete risk and many are still making losses. Three, some of the companies are using the balance sheet strength to finance the sales and they are getting valuation on the sales. Fourth, there will be a lot of competition. India is a beautiful place where you have huge number of young entrepreneurs, technology oriented, and there will be a lot of people who will enter the digital places because building intangible asset in the form of digital assets very easy, but making tangible profit, which is a durable one for years, that is very difficult. So I would be extremely cautious about digital business valuations in 2026.
Okay, digital business is an area of being a bit cautious when we enter 2026. Any dark horse performing sector that you believe or you want to bet big on for 2026? Something that is away from our eyes, but that could certainly, definitely take the top spot in 2026.
uh, these hospitals, there are a lot of small and mid-sized hospitals, and that is where a lot of FDI is also coming. So that can be, multi-bagger opportunity in the next 1 to 3 years in quality hospital businesses. Also in old period sector banks, which have completed 8 to 10 decades, could be a target because many of these banks do not have identifiable promoter. Promoter holding is zero, and I believe even regulator will be very happy if companies, banks like Japanese bank or the UAE based
Yes.
banks come and take the stake in old period charter bank. They run them, by sitting on the board. So these are some of the theme. I believe I may be wrong. I believe they will play out in a big way in 26.
Okay. What about the IPO space, Mr. Jogalim? This was the year when we have seen 1.76 lakh crore rupees being raised by IPOs, an unprecedented amount of money, and it was a record IPO year. Many trends that set in this year. We had 18 startups getting listed. We had the record fundraise via OFS, the offer for sale. So the selling shareholders also, topped the charts when it came to the fundraisers this time around. Over 103 companies, I believe, in main board that listed their companies this time. And next year also, there is a heightened expectation that the IPO rush could continue. If I have to ask you on the IPO space, what is it that your strategy will be? What would you advise clients in case 100 companies listed this time? It could be even more, 120 or 130. If that happens, then how should one be really devising their strategy? Some of the marquee names like maybe a Reliance Jio or NSE could also be coming in. That's a big expectation that next time as well.
Yeah, very interesting question. Historically, the IPO also is a cyclical one. The IPO space, starting from Akshat Mehta boom time, I've been observing it doesn't last continuously. It spikes and then fizzle out. It is logical based because the liquidity constraint plays out. So as you rightly mentioned, already nearly 2 lakh crore is mobilized through IPO, and
Yeah.
Indian promoters have sold shares worth 2 lakh crore in the last 15 months or so. And also the FIs have been selling. Some of them could be in, even in the large mid caps. So there is a real liquidity constraint, and also 60% of the listed stocks are in red in 25. So the liquidity in the hands of the retail investors is slowly getting squeezed. So that is going to reflect as it has happened in the last 30 years in 2026. So yes, the quality stocks will continue and there will be a lot of appetite. But in the periphery, the stocks, suddenly showing a spike in the revenue and profit and asking for a huge premium to listed players. That kind of offerings will get punished in 26, and that is good for economy, market, and investors because some balancing effort needed in valuing the IPOs. So I believe 26 is not likely to repeat what we saw in 25. It will be more healthy. The quality IPOs like NSE, as you mentioned, many more such a quality players can come, and that will continue to give opportunity. So as far as investors are concerned, they should, I would even say that greed is nothing wrong, but you should work towards achieving your greed because if you take some of the stock, they have given even 100%, 100 time, I mean 40-50 time return also in the last 10 years. Even in
Yeah.
5 year period they have given even 20-30 times return. So nothing wrong in having a greed in the market, but it
Yeah.
should be rational based. You should work for it. So therefore what I am saying, never grab IPO through offering or post listing if valuation is more than 10-20% premium over listed player. Control your anxiety, not the greed, but the anxiety driven the decision what destroy the equity wealth. So one should be very
Fair
cautious
point.
in the new year.
Fair point. Mr. Choklingam, let's try and understand another aspect as well when it comes to the new year, that's 2026, in terms of how should investors be approaching this space as well, is by understanding what are the big triggers that one has to keep an eye out on, what could shape the market's direction in the new year. The first big trigger will definitely be the upcoming budget, because we are just about a month away from that, and that will be the first major trigger that the markets will be waiting and watching out for. Last time around, the budget made massive announcements by way of the changes in the direct taxes. Thereafter, in the year, we also saw the indirect taxes getting changed. It was definitely a year where tax-related reforms were on top agenda for the government. This time around, in the budget, what do you think will be on top agenda for the government, and therefore, how should investors, market participants, play the budget theme right ahead of it?
Generally, the budget matters to the market only for a couple of weeks. I'm not saying that the budget is irrelevant. Budget is very much important, but the way the budget implication for each individual stock, hundreds of stocks and sector, that is overplayed. Otherwise, budget for giving a macroeconomic signal, yes, it is very very important, but still it is not that important because this government in the last 10, 11 years has been always promoting economic reform through budget, even outside budget. We saw massive GST cut and happened outside budget. So yes, still I would say that this budget would focus on continuous. It would give continuous effort on reforms, and particularly this budget should focus more on manufacturing, because now AI threat is very near, and it is real also. And ours is a service driven economy with 65% of the GDP coming from service sector. So this budget would give a lot of emphasis on manufacturing to improve the capex. So a lot of engineering companies can hope for a better future, and it would also try to give more resources in the hands of the people through direct tax benefit and GST benefit marginally, because major doses already come. So that would drive the market for next 1 year in a positive way.
Absolutely. If I have to ask you to call out where exactly is a bubble-like space being formed, what should be investors, very, very aware that they should be, what would you say? Is there any bubble-like situation in the market?
Certainly, it is there, and fortunately, it got corrected. As I said, 60% of the stocks are in red, and
Yes.
there are many stocks which are down 30, 40, 50% also from September 2024. So the bubble already got corrected, which is not reflected in Sensex Nifty, and it will continue to correct. The bubble is in newly listed IPOs. The bubble is in digital space. I am not saying that all digital stocks will correct. There will be one or two leaders who will definitely emerge. But ultimately, you need to understand the fact that investors, public, they like profits. Whether promoter or investor, they like bottom line. So you can't keep selling the story only on sales. You can't keep on selling the story on the base of intangible assets. Your
Yeah.
profit should be tangible. So that is not possible for all the digital players. Even if tangible profit is made, but the kind of valuation they are commanding, I don't think all of them can fulfill. So one has to be extremely cautious on newly listed IPOs and also in the digital space, and don't lose your valuation comfort, and also have traditional businesses, tangible businesses in your portfolio. That is what I would suggest for 2026.
Okay. Mr. Choklingam, towards the end, let's try and understand from you a basket of stocks that you can list out for all our viewers to probably look at including into their portfolios for handsome returns going forward from here. If somebody is looking to rejig the portfolios, what are the kind of stocks that they should be looking at to add to the new year?
Yeah, I would suggest 6 to 7 stocks, but I would like to say that among them, I also personally invested. So where I have invested, investors can verify from their investment advisors. They should, evaluate thoroughly. Don't go by my words. So one is Bayer Crop Science. It is still close to 52-week low, and it's a big play on agri theme. It is claims to have digital farming and interaction with millions of farmers. Second, the engineering company ISGEC. This stock is also down about 40% from 52-week high. If investors can go through the con call notes, which give you a lot of comfort, lot of orders on the book, and the company is planning to sell off loss making foreign subsidiary, that would be a big trigger. And third stock, Karnataka Bank. I have personally invested, my family members have invested, my company invested. This is still available at a more than 30% discount to adjusted book value. I am not able to understand why such a 100-year-old bank trades at a steep discount to adjusted book value with close to 1,000 branches, a lot of ATMs, and the financial and intangible asset is very big for this bank. Fourth one, Artemis Medicare. It is a hospital business owned by Apollo Tire Group, and we have a coverage. And I also bought this. We also bought this stock personally. And Geo Finance. It is very surprising that a lot of NBFC stocks have rallied, but Geo has not rallied in the last few months. It is still trading at 1.6 times price to book value. It is emerging as a financial service conglomerate, and it has got lot of Reliance shares, which I believe can be used in the long term to improve its lending base. The finally Nesco, this is again I have invested personally. I continue to believe that it is a very very attractive stock because of a good quality of management, very strong balance sheet, lot of cash, and 70 acres of land in the heart of Mumbai city. According to the management presentation in August 24, only 20% of FSI is used. So theoretically, the capacity can be expanded, for fivefold from the current level. So I like this stock purely based on the fundamental, but I have invested in this stock. These are the some of the stock I consider as high conviction stocks from our research coverage.
Okay, Nesco, Geofinance, Artemis Medicare, Karnataka Bank, ISDC, all of these stocks could be definitely looked at as far as the new year is concerned. That's where there could be enough and more potential for an upside that you could be seeing in all of these stocks going forward from here. All right, Mr. Chokalingam, thank you so much for being with us on this special edition. Here's again wishing you a very happy new year. As far as the Business Today television team is concerned, we are grateful to you for all your time that you've spent with us, with our viewers, guiding them through all the market moves that we saw through this year. And we hope that you will be with us in the new year even more to guide everybody who watches the channel.
Thank you very much. Wish you all the best. It is my pleasure to come on this channel.
Thank you so much, sir. Thank you so much for being with us. All right, viewers, just about last 1.5 minutes remaining for 2025 stock markets. When we look at the Nifty, we're at 26,134.7% of an uptick, ending the year, on a positive note, 195 points higher in trade. The Nifty has managed a 10% uptick in year-to-date gains that we have seen already. It's the Nifty Bank that has outperformed this year. Look at the gains right now. It's still inching towards the day's high point, and you can actually see a 0.76% move there. But let's look at the entire year. So far, the Nifty Bank has given over 16% gains to investors' portfolios as well. 17.2% of a rally for that one. Let's look at the mid and the small caps. The mid caps and the small cap index, both of them have made a comeback today, over 1% gains that can be seen today. For this year, the mid cap 100 index has managed a 5.5% of an uptick. For the small cap index, yes, this year has not been a good one. The worst performance that we've seen for the small cap index in many years that we have seen in the last few 5-6 years. Today it's down, it's up by about 1% odd. But over this entire year, you could have seen about a 5.5% kind of a downtick that we've seen. Half of the BSE 500 stocks are still ending negative, but nevertheless, there is hope that there could be a bounce back going forward. On the sectoral front, you can see metals with a photo finish, a 25% rally. Today also, they have moved up in trade. So 1.5% higher. And for this year together, the Nifty Metals Index topping the charts with around 29% rally that we've seen for the metal index as well. Let me look for all of you. What exactly as far as the Nifty top movers, top gainers are on the last trading session of the day. Well, you do have a lot of names that are coming in from the metals pack: JSW Steel, Indices Bank, ONGC, 2.5 to 4.5, 5% kind of a move. Tata Steel, Kotak Mahindra Bank, Reliance Industry is also about a 2% higher in trade. Axis Bank, SBI Life, Titan also managed to move up. Let's talk about the laggards. What got left behind in the rally today? TCS down by 1.2%, one of the biggest laggards of the Tata group. In fact, that has also led a lot of losses for the group as a whole. 3 lakh crore rupees and above kind of a market cap loss for this one. Tech Mahindra, Infosys, IT stocks on the back foot on the last trading session of this year. Bajaj Finance, Wipro also among the laggards today. But Nifty 500 top gainers, you have Graphite India 9% higher, Craftsman Automation 6% higher. You have HPCL, MRPL as all of those stocks that have moved up in the Nifty 500 basket. On the laggards front, you have names like Navin Fluorine, Hindustan Copper, Vodafone, ABSL, AMC, all of these stocks that have dragged in trade. All right, viewers, we'll wrap it up on that note now. Here's wishing you and your loved ones a very happy, prosperous, and a profitable New Year 2026 from the entire team of Business Today Television. In the new year, we promise to come in with better shows, bigger shows for all of you, and to get an opportunity to listen into the best voices on the Lal Street to help you decode the markets and identify the right strategies for your portfolio. Stay tuned with us. See you in the new year now. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show that shows a sneak peek into the latest edition of the Business